Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. This is our fifth installment on building and optimizing financial guidance as a public company. And in today's video, we're going to talk about the key differences between these two constituents that I keep talking about, which is operational finance and capital markets finance. And the key here is you have to remember these are two very distinct languages with nuances to both. And the key is that operational finance is about amorphous detail, meaning it's a lot of scenarios, a lot of forecasts that are constantly changing. This is why it's amorphous. Then the capital markets side of finance it's the summary level. It's about simplicity because of time constraints. And the key is that there's nuances to both and that it's hard to translate operational finance to capital markets finance if you don't understand the capital markets piece first. Typically, if you don't have that muscle, it's hard to go to that summary level. So what is operational finance? Operational finance is nothing more than the internal budget and forecasting activities that are driving the financials of the company. And they're detailed and they're complex. Why are they detailed and complex? It's because it incorporates a lot of forecasts, a lot of scenarios that are changing. And the important piece is there's a lot of non-public information. The company has more detail in order to provide a summary than the investors do on the capital market side. They have a lack of knowledge of detail. And that's why the art is translating this amorphous detail into a summary that capital markets investors can utilize to get to a given outcome. And the key here is you have to be able to do this, deliver this summary without divulging non-public information. So what is capital markets finance? It's the highest level summary of finance. And it's driven by scenarios, typically guidance from a public company, and industry data that's collected through calls and discussions during the quarter. And the key here is that on the Wall Street side, the capital market side, not all information is publicly available. Sell-side analysts, buy-side investors are making guesses as to what's driving a model at a business. We don't have the necessary information to create an accurate summary or guidance on the business. And the key is that there are time constraints. The time constraints of Wall Street require simplicity. I have to work on a lot of different companies, a lot of different things. Therefore, I don't have a lot of time to spend to build a detailed guidance model at times. So let's get really down to it. What is the difference? Well, operational finance is about high complexity and very detailed. And it's about how do you take that high complexity and detail and bring it to capital markets finance, which is a summary level and simple. And that's why it's so hard, is that most executives don't struggle to go from that detail to the summary level. So what are the key learnings? Optimize the summary detail, your guidance, by using all of that internal data that you have. And secondly, this means the company has all control of success. I have all of the detail I need to provide a useful guidance range to capital markets investors in order to drive them to an outcome I prefer. If I'm not doing that, then there is an internal problem where I'm not utilizing all of the data I have available to optimize that financial expectations management. Thanks for watching.